Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Matthew Tuttle, CEO of Tuttle Capital Management, to discuss SARK, an ETF launched on November 9th, 2021, which allows investors to express a short view on a portfolio of companies across several transformational industries such as next-gen internet, EV, genomics, and fintech. Matthew, it's great to see you again. Welcome back to Trade Talks.
Hey, thank you for having me.
You got it. And certainly fortuitous timing with the launch. Explain to us why you launched SARK.
So there was a few reasons why we launched it. The most obvious, obviously, is the demand. You know, when we kind of came up with the idea, there was 2.7 billion short ARKK directly, and a lot of people buying puts, structured products, all sorts of stuff. But really, why we did it was a couple of other reasons. Number one, look at the macro environment. You've got the Fed raising interest rates, you've got higher inflation. What we know doesn't work in that type of environment is unprofitable technology companies, which is what's in ARKK. Number two, it's just a better hedge. Historically, people use inverse ETFs to hedge portfolios. So like inverse Nasdaq or inverse S&P. And what you're doing when you're shorting the Nasdaq or the S&P is you're shorting FANG stocks. You're shorting, Microsoft, Apple, Amazon, Google. And nobody ever got rich doing that long term. With this, you're shorting Teladoc, Zoom, DocuSign, companies that are in bear markets. So to us, just a better way to hedge a portfolio.
Right. And that was my question to you. Why is it a better way to short ARKK? Why can't you just buy puts on that?
So there's a lot of different reasons there. I mean, number one, puts, there's a cost to it. Number two, you've got to get your timing right. And number three, you could get everything right and still not make money because of volatility. Volatility may go down, volatility may go up. So a lot of people just aren't comfortable with puts. Another thing you might say, well, why don't you just short ARKK directly? A, you can't do that in an IRA. B, not everybody can short. And C, not everybody's comfortable shorting. So we just want to give investors another alternative if they want to express those views.
Right. Well, as we know, too, shorting can get very expensive at certain points as well. So, Matthew, when we look at the macro environment a little bit longer term here, really over the past 10 years, it's been buy the dip. Stocks go from the bottom left to the top right of the chart. This seems to be a little bit more elongated pattern of this sideways, choppy, volatile trade. What are your thoughts going forward as we look into 2022? We know there's a number of macro factors out there that are going to impact the tech stocks, as you, to your point, at the top. What else are you looking at here?
So it's the Fed, interest rates, inflation, because the environment that allowed the companies that ARKK buys to have massive multiples, the environment that created meme stocks, Bitcoin, all that stuff, was the Fed keeping interest rates at zero and pumping liquidity into the system. Now that is changing, that's going to change everything. It's going to change the way that, that people price all of these assets. And that's what you've been seeing the past couple of months. So we're laser focused on that. SARK is a big piece of it. Also making sure, we're buying value and dividend stocks in our FOMO ETF. So I think that is going to be the major theme for 2022, a massive repricing.
Right. And Matthew, I would agree with you there. There had to be a valuation reset. And to your point before, these companies aren't even profitable. But when you look longer term, longer term retail investors such as myself, 5, 10, 15 years out, technologies like a Zoom, like a DocuSign, they're still relevant. I can't imagine that we won't be using Zoom next year as an example. Longer term, with this valuation reset, what are your thoughts there?
Yeah, I mean, longer term, these companies that, allow you to have calls like this, that allow you to sign documents, on the internet. I mean, they make your life easier. They're not going anywhere. The question is, who are going to be the leaders? So, I mean, one person's innovation isn't necessarily another's. I mean, maybe it'll be Zoom. Maybe it'll be somebody else, a Microsoft or somebody else. So we don't know. So, yeah, that technology is going to be there. You just got to figure out who the leaders are going to be and, at what valuation do you want to buy that? Because, how do some of these companies monetize these services?
Right. Great points. All right, Matthew, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.